Hello and welcome to Wall Street Wisdom. My name is Darren Woodfork. I'm an attorney in Arizona, and as an attorney that means that I'm skeptical about what's being said online or what's being said in public. And my mom came to me and she said that she saw online that you can make $1,000 a day by trading options, and she wanted to know if it's really like that easy. Long story short, it's not. And so I'm explaining to her kind of what the options market is and what options are about from the ground up. And so that's basically what this channel is. It's kind of like the conversations I have with my mom. I'm having these conversations with you, starting from like the very beginning of what options are. And you can see on my shorts channel all the beginning definitions and kind of what options do and things like that. Today's video though, I'm going to kind of emphasize why options are so powerful. And that's going to be kind of from my legal point of view, in that if you go back through the years, you'll see that most of the people who got in trouble, like with the SEC or the DOJ or anybody who got in trouble for insider trading, and insider trading basically means that you have non-public information that you act on in the market, and then when that information becomes public, the stock shoots way up and you make money. That's insider trading, and that's illegal. And so one of the things that I think is interesting is, in my legal career, I noticed that all these people who are charged with insider trading, they were all caught because they were using options. And the reason why they were using options is because of the leverage when it comes to options. So, I mean, for example, if you are involved in a company, say you're the secretary of a company, and you know that there's going to be a big merger with another big company in a month, and they tell you this information as a part of the company, and at the time they tell you that, say the stock is trading at $60 a share. Well, you know that, you have that inside information, nobody else knows that, and once that deal is announced, once your company merges with the bigger company, let's say the stock is going to double and going to go up to 120. Well, people can go out in the market, they can buy the common stock, at $60 a share, and they can spend, $6,000 and buy 100 shares at 60 or whatever. They can do that, but they never do that. What they do is they buy the options, and they'll buy like these way outside what they call out of the money options, and then, like in my example, they'll buy the 120 call options, and like nobody's buying that because they're like, how is that stock going to go from 60 to 120 in say a month or 2 months, whenever the expiration is, and so those options are super cheap. And so those options might be like 3 cents or 5 cents per option or 10 cents per option. So instead of the secretary going out and spending $6,000 buying those 100 shares on the open market, they use that $6,000 and buy those 5-cent options. And so once the deal is announced and it goes up to 120, they make $500,000 or whatever the conversion is. So that's how people get in trouble, because they use options. And the SEC and the DOJ and all those law enforcement people are looking at what's called unusual option activity. You don't really hear about them looking at unusual just stock buying activity. They always look at unusual options activity, and that's again because each option is so powerful. Each option basically controls 100 shares of stock. So that's why everybody uses options when they are involved in insider trading. So again, and the reason why I bring that up is just to kind of prove that options do work and they do have leverage. And again, if you're right, you're really right, because you're controlling 100 shares of stock. But remember, insider trading is definitely illegal. The second point I want to talk about is the real life, real world reason that options are valuable, and also kind of what's called derivatives. And basically an option is a derivative. It's basically the option is derived from the stock. And so what's so good about this is that if you're just like a regular company, you can use options to hedge your risk. And so because each option carries so much leverage, and it's so powerful, if you're a company, just for a little bit of money, you can hedge your downside risk. So let's say you're a airline company. And if you're an airline company and the price of fuel, as the price of fuel goes up, that's going to cut into your bottom line because the cost is more expensive for you to fly. So obviously airlines know that. And they know that they have to buy fuel. So in order to hedge their risk of the fuel going up, cutting into their bottom line, what they'll do is they'll go out into the options market and they'll buy, say, call options, so that in the options market, they'll make money on the call. As the price of oil is going up, yeah, it's eating into their bottom line, but they're making money in the options market because they're long or they have calls on the options market. So that's how they hedge their oil risk in the real world. And so you can see how, just for relatively little bit of money, you can hedge that risk that the oil is going to go higher and eat into your bottom line. So I think that's the greatest thing about options. It gives you an ability to insure yourself. It insures, like I said, in that airline example, that's a great way to use options and derivatives. The way that people can use, just like regular us people can use options, is if, let's say you've made a lot of money in, let's say recently you made a lot of money in gold. You bought gold and it went up, 30% in the last couple of months. Well, if it's sitting there where you're on a 30% profit, you're like, well, you see gold starting to go down, you might say, well, I don't want to do a round trip. I don't want to lose all my money. And instead of selling the stock, you can buy a put on the stock and protect yourself. So if the price of gold starts to go down, that put that you have, the put that you'll profit on the going down price, that'll go higher and offset your loss from the actual stock, but the put will go up and you'll be hedged, you'll be insured. So those are the two. I mean, I think that's the best reason to trade options, is to use them as insurance. And again, the other point that I made, though, as far as like the insider trading, that is just basically to prove that it works. And like I said, if you have, you'll go to jail, but if you have inside information, you use the option markets to capitalize on that inside information. But again, that's very illegal. And so, you can't do that. But anyways, hope that was interesting to you. Like I said, this world of options, it's new to my mom for sure. I've been trading options for 25 years. I took what's called the Series 65 exam. It's an exam that you can sit for, kind of like the Series 7, but it's you don't have to be sponsored by a broker to take it. And I took that probably 15 years ago. And so I've always been involved in these markets. But anyways, hope that's interesting. If you like the content on this channel and you check out all the short videos that I have up there, please subscribe and like the video, and I'll have more videos. Probably the long form videos like this I'll probably have every week, but the shorts I'll have every day, all the beginning information, for your consumption. Anyways, thank you for watching, and I'll talk to you next time.